Hello and welcome. This is Dan Youngs, and on behalf of myself and Jordan Morhefka and the rest of our team here at HFG Financial Group, I'd like to welcome you to our 2024 first quarter economic review. At our firm, we partner with clients and believe an educated client is our best client. While we always try our best to help you, when it comes to your finances, we believe that knowledge is power. And one of our missions is to share with clients any knowledge that can help them make informed decisions. The first quarter of 24 continued to reward investors who stayed the course. And as you can see from these charts, while the equity markets movements were not in a straight line, they were upward for the first quarter. The S&P 500 experienced its best first quarter since pre-pandemic in 2019. All three major indexes had strong finishes, and both the S&P 500 and the Dow Jones Industrial Average closed at record levels for the first quarter. The Dow Jones Industrial Average finished the quarter up over 5%, and the S&P 500 returned over 10%.
Interest rates have also been a big topic lately. The Federal Reserve hasn't raised rates in the first quarter, and they remained at the target rate range of 5.25% to 5.5%. During the Fed's March meeting, it also indicated that we could see several rate cuts in 2024, but again, we have not seen any year to date. Inflation, also a topic of concern for a lot of people over the past few years. Over the past year, from March to March, inflation has shown a rise of 3.5%, and this was a slight increase from February, where the 12-month change was up 3.2%. There are 6 more scheduled Federal Reserve Committee meetings in 2024, and although it is currently anticipated rates will go down at some point in the year, the Fed remains committed to achieving a 2% inflation rate goal and intends to adjust rates accordingly should inflation pressures continue to have a resurgence. Safety in the market at this point comes with a cost, and even though interest rates have risen, many major banks are still averaging low interest rates to savers. According to Barron's, the average bank money market rates as of April 1st, 2024, are still only 0.6%, and the average 12-month CD was 1.95%. While these may have increased from the last 12 months, savers are still seeing lower returns. If anyone's interested in exploring better interest rates than the ones mentioned, please contact our office.
If the Fed delays cutting interest rates again, or possibly reducing the number of predicted rate cuts in 2024, this and other major negative events could adversely affect equity markets. Uncertainty and confusion could also shake the strong investor confidence that is now prevalent. With many unknowns ahead, it is always possible to see a market correction in the near future. Most economists predict that should a market correction, as defined as a 10% or greater in the price of a security, asset, or financial market happens, it would be a modest one. As the chart shows, since 1954, a first quarter of more than 10% returns in the S&P 500, the second quarter was higher 9 out of 11 times. All those years include pullbacks, which are temporary retreats of no more than 5 to 10% in the price of a stock, or the correction during the year. However, 10 out of those 11 years ended with positive returns, with an average of 11%. Coincidentally, the average pullback during the year was also 11%. Please remember, as with all data, past performance does not indicate or guarantee future results. The global economy continued to have its share of uncertainty during the first quarter. This year, the U.S. is in the middle of a heated presidential race. There are also key races for Senate and House of Representatives that could impact global policy and tax law, leaving much up in the air. Uncertainty and unrest within the geopolitical issues are also a key fear for equities, and we will continue to keep an eye on how they would affect the equity markets. Although the first quarter of 2024 was positive for investors, equity investments should be viewed with a long-term lens, and short-term movements are still always unpredictable. Now is a good time to review your investments, confirm they are still in line with your time horizon, risk tolerance, and goals. Regardless of what 2024 will bring, it is always smart to watch your expenses, make smart money and investment decisions. We believe in a proactive preparation, and our goal is to provide our clients with solid financial strategy that is carefully designed to withstand any market environment. A long-term strategy should always be the benchmark for smart investors.
As a recap of a healthy first quarter, here are some things to remember. Inflation is still elevated and a possible cause for concern. The Fed is still indicating we could see rate cuts in 2024. There's also several key factors that could bring possible market correction. Volatility in the market still remains. So remember, a well-balanced portfolio should be designed to understand that volatility is also always possible. Staying the course and maintaining the consistency of a well-devised, long-term focused plan has historically served investors well. At this point, it's not time to throw caution to the wind. As investment professionals, we like to be prepared, and recent history has shown that anything can happen. So once again, proceeding with caution should still be the principal notion for investors. At HFG, we help clients create a well-crafted strategy and plans that are customized for their unique situation and goal. This plan includes considering your time horizon, tax implication, liquidity needs, risk tolerance, and just overall personal financial objectives. If you have any questions about your personal situation, please call our office or tell us at your next meeting. We are very grateful for our clients and appreciate the opportunity to partner with you in your financial journey. And one of our goals is to help more people just like you. So if you know anybody who may benefit from our services, feel free to share this video with them. Or if you want to add them to our mailings or videos in the future, provide their contact information and we get them added to our list. Again, we want to thank you for your trust in us, as one of our primary goals is to keep our clients informed, and we appreciate you watching this update. If you have any questions, you can feel free to call our office at 269-372-3229. Thank you.